What's up, homies? Well, if you've been waiting for a new market update, you picked the right time because, my friends, the tides are a-shifting and there's new numbers out there. Mortgage rates just hit a 2-month low. Pending home sales, they're also at an all-time low. And sellers are slashing prices at record levels. And inventory's finally creeping up. Of course, it's not enough, but it's moving. All this put together, it finally may be looking like things are getting better for buyers in 2025. But so far, the only thing that we've actually been able to count on for sure this year is the unpredictability of what's happening. Let's break it down.
How to Buy a Home educates, protects, and connects first-time homebuyers to local, qualified realtors specifically for first-time buyers. Whether you're looking for DIY information or personal step-by-step guidance, How to Buy a Home is your #1 resource for first-time homebuyers.
Today, I'm going to be dropping some up-to-the-minute current market data. And as always, when we analyze the market data, keep in mind, this is just what's happening right now. And if things start to look shaky a little bit in the future, I absolutely will let you know. Now, this is good news for us, but it's not necessarily monumental, like let's go ahead and change our whole philosophy and strategy and plan. If something like that happens, I'll let you know. So take today's data, realize the positive with it, but also some of this data could be the beginnings of a major shakeup, but we won't know that till the end of the year. So there's been some interesting headlines in the last week. And when you combine those with the non-headline data, some underlying things that I've been monitoring here in my nerd cave, it looks like the big 2025 spring rush on the market, it looks like it might be getting delayed, postponed, which means that window of opportunity, it might stay open maybe past the winter thaw. And hey, buyers, that's a good thing for you. All right, so let's get into the data. What happened in the last week that made the forecast adjust? First up, mortgage rates dropped, but not as much as everyone wants them to. And unfortunately, not as far as many economists were expecting them to do in March 2025. I got this data from Freddie Mac on February 27th. The 30-year fixed mortgage dropped to 6.76 on an average. So that means rates have hit their lowest point in over 2 months. But unfortunately, they're still hovering near 7%. So that forecast of the spring rush, which was predicted based on 6.5%, maybe even down to a 6% interest rate, that spring rush might not be so rushy. Some of the things we've been seeing is that the Fed, they're holding steady on their rate. There's a crazy formula of unemployment not going up and inflation not going down. And that's creating this bizarre thing where the Wall Street investors, they're actually talking about the R word. They're fearing a potential recession. Yeah, the term recession is being tossed around, and not with political or emotional motivation. They're actually talking about it because it comes straight from actual economic numbers. Specifically, the 10-year bond market dropped to a new low, sneaking below 4.3% for the first time in a while. Now, that means that the investors feel the economy is weakening. They're pulling money out of the stock market and they're putting it into the bonds. You see, when they start to flood the bond market, well, then the bond rates drop because they don't want to give everybody big interest rates because that's the way finance works. So the million-dollar question is this 10-year bond rate dip or correction, is that the beginning of something dropping a lot more? And then subsequently, that would mean that we'd see mortgage rates drop. Not just talking like dropping a quarter point, but maybe, I don't know, half a point or all the way down to 6. That's what we got to figure out. Are the bonds going to keep going down? Because remember, mortgage interest rates tend to follow the 10-year treasury bond. That's why we got this dip this week to the 2-month low. And I don't know, should we be getting excited about lower mortgage rates? Oh, but wait a minute. If we got excited about lower mortgage rates, that would mean that bonds are going down. And that would mean that people are pulling out and putting it into the bonds, which means that means a recession's happening. See how weird this is? In order for you to root for lower rates right now because of where inflation and unemployment is, you're actually rooting for investors not to be putting money into the stock market and flooding the bond market so that those rates go lower. But philosophically, if that happens, that means that you're rooting for a recession. Oh my God. Once again, I'm going to refer to the godfathers of hip hop, Run DMC, from their classic track, Peter Piper. Not bad meaning bad, but bad meaning good. Remember that team? Bad news for housing or the economy like a recession, it's actually good news for first-time homebuyers. All the news is out there for the sellers and people trying to watch their appreciation go up or their stocks go up. So when bad things are reported, it's good for you trying to buy a home. Now, we've also previously discussed that if rates hit 6% or dare we say into the fives, the market's going to go bonkers wild with competition. Everyone forecasted that that was possibly going to happen this spring. Well, for the moment, that's been held off, especially because inflation's going up right now, which puts us in another weird, confusing place. That means if inflation keeps going up, now the Fed's going to cut their rate, which means the investors are going to go into the bond market, and then mortgage rates could go down even more. Is this going to happen? I don't know. That's why we keep giving you the data every week. This is why I'm dropping this information as instantly as it happens. 2025, expect volatility, expect ups and downs, expect unpredictability. More analysts, they're not predicting we're going to get down to 6%. They're more predicting who the hell knows it's going to bounce up and down between 6.5 and 6.9 for most of the year. So that's where we're at, peeps. So if you're one of those buyers that listened to me back in the fall and you're getting ready to pounce on the window of opportunity, stay the course. In fact, you got a little drop in interest rates. Go for it. But what if you're one of those people who was bummed out because you were like, dude, I'm not going to make it in March or April. I'm going to need 6 months to get myself in a position to buy. I'm afraid that if I have to do that, that the prices are going to go up because there's going to be huge demand with this spring and summer thaw. Well, the good thing for you is the data and the numbers right now, early March, they're showing this winter freeze. It might carry over for a few extra months. Okay, moving on to the next data point that hit just this week. Pending home sales hit a record low. This came from National Association of Realtors, February 27th. Now, wait a minute. A record low on the number of homes under contract. The pending homes for sale. What the is going on? Here's the info, homies. The Pending Home Sales Index, the PHSI, that tracks contract signings. It fell 4.6% in January to an all-time low. That's a big drop, 4.6% down. So that's an interesting way for us to be kicking off 2025. Now, the article goes on to try to figure out why is this happening. Here's some of the things that they suggested. Buyers are struggling with affordability. Higher mortgage rates are keeping both buyers and sellers in kind of a wait and see mode. And it talked about this. Sellers are overpricing homes as reported to you last week on the podcast. It also said that that means the inventory's up, but the buyers aren't biting on those prices. It seems like there's a group of sellers listing their homes at those higher, unrealistic expectation prices because they were thinking about putting their home up when prices were higher, or going up higher is the better way to say it, back in, last summer. 20 years of doing this, I can tell you exactly what happened. Let me give you like an example of the reason why some of these homes went up on the market in January and February and they priced themselves too high from the beginning. It's a story I've seen 1,000 times. Here's how it worked. Okay, so summer 2024, there was a homeowner and they saw that their neighbor sold their home for like 20 grand more than they've ever seen a home sold in their neighborhood. So partner and partner got together. They talked it over for a few weeks. After a couple of weeks, they called a realtor. Well, set up the appointment. A couple of weeks later, the realtor comes over. They walk through the house and they go, yeah, it's going to be great. And if, Sally's house down the street, that dump sold for $20,000 more, we can do great. But we do have to do some repairs and some sprucing up. So the partners work together and start working on the house. Well, now we've gotten into September. They suddenly realize, they got a lot of stuff going on in September, getting back to school. And the holiday season's coming up. So you know what? We're going to meet with a realtor again, let's say like second week of January after the holidays settle down. So then they meet then they schedule their photos, do their last minute cleanups, and they decide to get their home on the market the very first week in February. So they're just about to get ready to put home on the market and they figure out, okay, let's we wanted to put it for $40,000 more than Sally's home down the street. Oops, wait a minute. That price that you're putting it is based on last summer. Last summer, when the market was moving fast and prices were going up. But it's February now, but the sellers don't think that way. So what happens is people take so long to go through the entire process to get their home on the market, they end up putting it on the market with the expectation that the home is going to continue to rise in pricing, just like when they originally thought about putting their home on the market. Now you combine that with sellers oftentimes, I don't want to call them egotistical or narcissistic or self-centered, but let's just say they think their house is better than everyone else's. Now you got a double whammy of overpricing problems. That's why we had a record number as far as the lowness of the pending home sales for January. But wait a minute, there's a flip side to this story, a flip side to the incorrect pricing. Zillow reported on February 12th that sellers were dropping prices more than they ever have in years. So we have the lowest amount of homes under contract, but the sellers, 23% of them, they actually cut their prices in January. So maybe those guys were the guys that started in December, or maybe they started in January and they just immediately saw no one was coming to see their home. 23%, that's the highest percentage of any January price cuts since 2018. And what's even better is that the cuts, according to Zillow, are happening in some of our country's hottest markets. Phoenix, 34% of homes had January price drops. In Jacksonville, Florida, 31%. And in Orlando and Dallas, Texas, 29% of the January homes saw their prices cut. Now, here's some more facts and figure to kind of put those two things together, why the pending sales are down and why the prices are being cut. This is from Fannie Mae, one of the biggest players in the lending game in the United States. They reported that national home prices went up 5.8% in 2024. But right now, based on the data they're seeing, they're only expecting another 3.5% in appreciation or prices going up this year, which means that the prices will still go up, but they're decelerating. In other words, they're going up, but they're not going up as quickly. And they expect even more deceleration in 2026. So I guarantee you this, the people that were listing their homes in January, they didn't read the analysis on a decelerating market. All they're thinking is that prices are still going up. But yeah, they are, but they're not going up at, last year's 5.8% appreciation. They're going up at 3.5. But this is only the beginning of the year, so they're not going to get that full 3.5 till the end of the year, which means we're at a much slower price raising to start the year. You understand that? It's actually pretty cool. That means that maybe we're not going to get that spring explosion in prices, which means that window of opportunity might be open a little bit longer. The reality check, it's kicking in. For the sellers, I mean. The sellers in 2025 finally are starting to get it, reducing their prices, understanding they can't slap some crazy high price tag on their home and expect buyers to jump. What does that mean for us? That means the buyers have leverage. I love leverage. It's a game changer for you guys out there. Okay, homies, quick side note. When I give you all of these statistics, they're a national average for the entire country. Keep in mind, where you live could be a totally different market with completely different numbers. Also, bear in mind, these numbers are for all price points. Now, most of you guys are looking at the starter home and the entry-level homes. Traditionally, when you're working in those areas, you're going to see more competition, higher bidding wars, and not as many overpriced listings. The big overpriced listings that created those numbers that I gave you, a lot of them come from the middle move-up homes, but even more from the big luxury homes. So keep that in mind. I'm not telling you there's nothing positive happening in the entry and starter home. I'm just saying a lot of these stats may be for different parts of the market, but I've been talking to people all over the country and we're definitely seeing some of that in some places of the country. So it's good stuff for you guys. Just might not be as drastic as being reported by the national news. So talk to your local unicorn team and get your own regional numbers and local market trends. That way you can discover all of your own best options so you can find a killer strategy for yourself. All right, now the last piece of really encouraging data, this number is the number one factor that impacts the real estate market. You know what it's going to be, gang. We talk about it all the time. Inventory. This comes from a report that was written by a few different real estate companies on February 19th. It says inventory is rising, but still low. Oh, where have I heard that before? Okay, here's the exciting stuff. Active listings are up 25% year over year. 25%. That's a big number. New listings from existing homeowners, that means the people who are in their home and looking to sell their resale home, that one jumped 12% year over year. So that's cool. That means more homeowners are coming into the market, not getting as freaked out with the locked-in effect that we've talked about. And then the article said this, it's good for buyers. Inventory is still 13% below pre-pandemic levels, but we're getting closer. I hate that sentence. Inventory still 13% below pre-pandemic levels, but we're getting closer. Why do I hate that sentence? Because it gives false hope. Actually, it gives a false impression with the way that sentence was worded by saying we're getting close because we're only 13% from pre-pandemic levels. See, what that implies is that the inventory was balanced back in 2019. Wrong. We have been in a crazy low inventory shortage since 2012. Because 2008, 9, 10, 11, and 12 were the only 5 times in our history of ever building homes that we built well below 1 million. We're talking like 400, 500, 600,000 when we usually build 1.2, 1.3, causing a shortage of 2, 3 million homes back in 2012 that we've never caught up on. We are millions short in inventory. And this is important for you to understand when you're looking at all this data. So it kind of bums me out when these people are talking about pre-pandemic, post-pandemic levels. It's bigger than that. I mean, pre-pandemic, you ready for this one? On March 14th, 2020. Think about that date. March 14th, 2020. I had a regular starter home for sale. I had 6 offers in 3 hours on the market. So does that mean that if we got back to that level of inventory that we're in great shape? No, it means that back then we were still short in inventory. It doesn't mean pre-pandemic levels is not a bar to shoot for. Recent data shows that we are 3 to 7 million homes short, which is important for you to keep in mind when we're looking at this specific stat that came out in the last week, that inventory is going up. Yes, inventory is on the rise, and that's good, but it's not a fix. It's just a start. So for you guys out there, you can take advantage of what's happening right now, the rise in inventory, but also you can take advantage because we're also seeing the lack of homes under contract and the pending sales. That is reiterating that there's still a lot of fear in buyers. And you understand that their fear is based on a market crash, but the market's not going to crash because we don't have enough inventory, even if it's quote unquote rising. And for you, more data just so you can feel understanding. So you could feel understanding? Fantastic sentence, David. Let's try so you can comprehend things a little bit better. The inventory also shows that the days on market, it's slower than it usually is. That means home goes up and it stays unsold. That number's up to 66 days in February, which is 5 days more than it was back a year ago. So we'll keep an eye on the inventory, the days on the market, because it's pretty simple for you. More listings and less buyers, that equals more choices for you, which equals more negotiating power for you. So we combine all this data, which has kind of taken me a little bit by surprise and a lot of other people in the industry. And you know what? It turns out to be really good news for you. Great information for all you first-time home buyers that the window of opportunity might be open a little bit longer. And if you can act quickly, who knows, maybe you can lock in with the low mortgage rates. I'm literally recording this on Sunday, and those rates came out on Friday. So we could be at that 6, 7, 9 Monday, Tuesday, Wednesday this week. You could get in, get an approval, lock in for that. But hang on, let's pull back a little bit. The question is, does all this data mean that we're in for a longer frozen market than anticipated? If a plethora of sellers don't want to sell now because mortgage rates are still closer to 7 than 6, and we were hoping that rates near 6 would bring more sellers onto the market. Well, I can tell you this, I don't have the answer to that question. Things are moving fast. I mean, look, this whole podcast is about what changed in the last week. But the way things are going when we're looking at the overall factor of everything, these weekly changes, it shouldn't change your plans one bit. Why do we think that is? It's one reason. Say it with me now. Low inventory. So no, things are moving differently than I thought they would so far this year. And that's not just me. That's all the economists thinking. Everything's moving a little slower, a little more stalled. But I can tell you, because we still have the low inventory and because the demand still outweighs the supply, I don't know exactly how and when it's going to change, but straight up, there are only two options for 2025. Number one, we stay frozen longer into this year with the rates and the home prices not moving too much, with a lot of people sitting out on the sidelines. And then you dump your rent and get into a home while everyone's in a stall. Or number two, there's a recession. The economy pulls back a little bit. And that means the Fed's going to have to do stuff to help interest rates come down. And now that means that you and all the other buyers are going to be able to afford more home because mortgages are cheaper, which means there's going to be more competition, which probably means that the limited supply of the homes that there are, there'll be competition and the prices will go up. That's what we were anticipating was going to happen this March. That might be pushed off for the entire year, or it might happen, who knows, in the summer or the fall, or maybe the winter. So there it is, my homies. That's what up. Pending home sales, all-time low. Sellers, slashing prices. Inventory is rising, but interest rates, they dipped a little bit, but they're staying kind of high. This market, dude, I do this for a living in my cave, and it is tough to predict. So straight up, homies, just stop trying. It's kind of weird to hear from the guy who just spent all week analyzing all this data and now this entire podcast, breaking it down for you to say, hey, wannabe first-time homebuyer out there. The data, the math, the forecast, the analytics, stop trying. It doesn't matter. I know, weird, right? But it's true, because in today's rising rent economy, there's just some very simple math that when you pull back, it shows that no matter the fluctuations of this year, that it's a better move for you to jump in. You're going to be mathematically more wealthy and financially stable if you can create your rent replacement strategy as soon as possible. That means getting going ASAP. In fact, I just realized that we're coming up on the 2-year anniversary of me buying the domain getoffyourass.org. That's when back in 2023, I was trying to make sure people, out of love, I'm here and I'm trying to tell you, because low inventory, I know things were scary back in 2023, but getoffyourass.org. Seriously, still own it. You can go there. Check it out. So here we are. Current data could mean that we're going to see some stagnation here in 2025, but it doesn't change the big picture that I've been sharing since 2019 that made me buy getoffyourass.org in 2023. Low inventory. It's there. Supply and demand. So regardless of how bumpy the road is, the best thing for you to do is get on the road. If you want to climb the ladder to financial stability, you got to buy a ladder. There's only one data point that matters, and that's the low inventory. And until that number changes, then that's what we're going to be dealing with. And I'll let you know, sure, it's rising right now, but it's rising from the gutter. I mean, it's millions below what we need it to be. So instead of trying to overanalyze each new week's data, pan out, pull back, go full nerd with me. You know what I'm saying? Look down and say, okay, buying now means that I'm going to be buying while the inventory is still insanely under the necessary levels for us to exist as a country. So that means I'm going to see some sort of appreciation, not the crazy appreciation we saw in 21 to 22 to 23, but something. And most importantly, I'm going to get that ladder that David was talking about, to get my place instead of waiting for a ladder to be handed to me. So when I gave you those two options earlier, you notice that I didn't give you a third option of a crash. It's because the option of a crash hasn't been on the table for over a decade. The unresolved low inventory with the pent-up demand means a crash could only happen if there was some catastrophic outside force that intervened. And straight up, if that happens, then we're probably all going to be dealing with way bigger problems than the housing inventory. But without something insane happening, the math and the inventory data, it's all you need to be concerned about. And if you don't believe that, I was saying that in 2019. And then you know what happened? A global pandemic. And in 6 weeks, we were right back to a low supply and high demand. So I'm not sure any other kind of shakeup is going to tank the market. I've seen far too many first-time homebuyers be told like one of two things. Wow, what is it with the two things this episode? Anyway, I've seriously seen this. First-time homebuyers get told these one of two things. They either get misinformation by people that don't understand the entire numbers, which creates fear and paranoia and a basic stop to the first-time home buyer, or they get salesy information from companies who don't have the best interest of the buyers at heart, feels pushy, gross, and that stalls their plans. So I hope that this podcast can cut through the noise and bring you the most helpful truth so you can get ahead, because what's happening is through all the fears of the last 6 years while we've been doing this, things have still steadily gone up, but they're becoming more and more unaffordable. I have been trying to let everyone know that it's going to keep going that way. I mean, for real people, I don't know how many episodes you've listened to, but the mission's clear since day one to help you get the information that's just too hard to unearth. We want to get you to your ultimate goal. And also, I knew that many of you guys, the listeners, would want to be starting your plan from the day I dropped the episode with the magic number or some data point that was a perfect incentive to get you to jump off the fence and start your plan, but it's not happening. Bro, bae, chica, hombre, chief, any other horrible, can I get your attention nickname I could think of. Here's this happening. I'm straight up getting tired. I've tried all the different forms of communication on this podcast to explain the bigger picture and to let you know that starting a plan without being incentivized by the data like I dropped here, because I know that I have to, but not being incentivized by that and being incentivized by the big picture, that's what's going to help you. I've done it all here. I've dropped super dense data. I've waxed philosophical. Is that a word? I guess it would be philosophical. I brought in a bunch of different viewpoints, including my producer, who, as it turned out, was internally disagreeing with me for 5 years and probably going to have a heart attack and a stress. Well, no, he's got it out now, so hopefully he's feeling better. I'm rambling now, but gang, here's what's going on. I've gotten harsh. I bought getoffyourass.org. I've gone comforting and loving. I mean, if you go way back, there was like a year and a half I wouldn't shut up about Ted Lasso and believe. There's a reason for that. There's a reason why I've interviewed gobs and gobs of homies who actually freaking did it. And there's a reason why I give you the data like this so you can be encouraged. But the most encouraging thing is knowing that I'm the dork behind the microphone doing this every single week, but I'm a dork with data. And I can tell you, this is going to be a weird year. But those of you who get in this year versus those of you who wait to start your plan will be much happier, much more stable, much more people in control. That's my new word for 2025. In control. The data I gave you today is a tree. But for you and your own best result, pull back and look at the entire forest. If you do, you're going to start your plan to buy a home. And I honestly don't care who you start your plan with. I really don't. I mean, there's enough first-time homebuyers every single year that as long as people still reach out to me, that if a portion of them want to talk to the unicorns, awesome. My business will do fine. I can keep doing what I'm doing because I started this passionately intent on respecting your plight as a disrespected and undeserved consumer. So, I guess that means I've got two more things to say. It's my motif today. Two wildly different attempts in this episode to get you off your ass.org. Number one, the absolutely irrefutable current market data. It's revealing that, homies, there's some better stuff for buyers this week. And then number two, I just decided to go straight up emotional, rambled a little bit, and started trying to appeal to your sense of hope. So I gave you the data, and then I gave you the emotional plea that I've been just trying to say. I know you want to know everything about buying a home, but the bottom line is just get started right now. From one human to another, I've been saying make a plan ASAP since 2019. And even with this new data, that message is still the same. No more or no less urgent. If you want a guide to start your plan, go to howtobuyahome.com, hit the Ask David button, or from the same site, you can ask me for a unicorn. Also, be sure to check out the How to Buy a Home YouTube channel for more tips. The moral of this episode, holy crap, gang, it's turning into a buyer's market for you. The data's there. Also, even if it wasn't, it's still a market that you should be getting into for you to capitalize in your first home buying experience, no matter what you're thinking about doing for the next 3 or 4 years. Getting in as soon as you can, no matter what happens, start your plan. You can do this.
Looking for more DIY education or your own personal step-by-step guidance through the home buying journey? Since 2019, How to Buy a Home has been the #1 resource for first-time home buyers. So visit howtobuyaHome.com to get started.